Today, it's Edwin's Monday evening property rant. Hello again, it's Martin North from Digital Finance Analytics World. That is post covering finance and property news. Monday's come around once again, and Edwin is back for another rant. Hello, Edwin. How are you doing?
Well, I'm warm and cozy. Warm and cozy is the word for today, Martin, or the words for today, warm and cozy and loving life. Yeah, unfortunately, just got bad news though. A good friend just from 1 month to the next has been diagnosed with stage 4 cancer. So it's a bit sad, and this is when you really start valuing life and what we have and what we can look forward to for our tomorrows, whereas some people are hit with those shocks.
Yes, it puts things in perspective, doesn't it? I mean, obviously, I had a torrid 5 years with Jill's illness, and it really put that into perspective. And you value the good things of life and the simple things of life. But of course, the truth is that in the land of politics, things change and things stay the same. I'm quite fascinated by the landslide win, so-called, on actually a relatively small proportion of primary votes, and yet 92 seats for Labour now, 40 for the other side of politics, and the Greens are sort of a bit sad as to losing leaders. We've lost a couple of leaders. We've lost a couple of housing spokespeople as well. Crazy times, but I'm not sure it's going to make a lot of difference.
Well, no. The interesting thing is, like we've said, look, we've said recapping on last week's rant. It's a single horse running a single race, really. But it's not. We've got no choice. But look, looking at it from an observer's point of view, all I can say is that. Keeping it on straight and narrow is look at the wealth creation within the political parties, and you start to get a very clear understanding as to which way they're traveling, which way they're going to go, which way they're going to take us. When you've got ministers for immigration leading the charge with 6 investment properties under their belt, or 5 investment properties and a principal place of residence, who knows how many more they've got in under trust that aren't necessarily all theirs, or could be or hidden or whatever. But look, at the end of the day, this is what's being disclosed. This is what we have. The coalition aren't any different. And if you look at the number of properties declared by politicians, that Tarek also put up that graph there earlier today, it's phenomenal as to who makes up the biggest count. And this is what it's all about. This is what it's all about. And as to that wealth creation for the elites, wealth creation for the haves, transfer of wealth from the have-nots more so to the haves, and growing. As we've said before, I think the best currency and the most valuable currency that we have moving forward, the most of us have moving forward, is our health, and our zeal for life, to move on ahead and keep on going. That is something that can't be transferred to others, and they can't be taken away from us.
That's absolutely right. And to just give you a bit of perspective, but when you see so many politicians holding multiple properties, you sort of can't help wonder about it. And your meme from last week, which is just worth putting up again, right? About I can't believe there are 2 major parties. We'll just get the real estate agencies of the 2 parties to continue. It doesn't really make much difference which party's in power or not. The truth is that the interest within the political sphere relating specifically property means that what they propose to do is going to be very, very lopsided. And of course, it's all talking about higher home prices. And what I find fascinating, whether you've seen some of the recent coverage, but the articles in the papers This one, for example, Sydney's $2.4 million future average price for houses in 5 years' time, right, in Sydney, right? The key higher home prices, particularly in family zones, and they're talking about PropTrack's and realestate.com's calculations about how much prices are going to go up, what a house will cost in 2020, 2.4 million in Sydney, over a million in Melbourne, 1.5 million in Brisbane, 1.47 million in Adelaide, Perth 1.3, Canberra 960. I mean, you've got to say, we know what they're smoking. And we know that they're smoking higher home prices because effectively, that prices are going to go up. And then, of course, you have the old what property prices will do as interest rates fall. Guess what? A spate of interest rate cuts, according to Tim Lawless, Catality, formerly CoreLogic, and also NAB talking about it too. Rate cuts to lift the economy and to lift home prices. And even we had James Kirby, eager first home buyers to push prices higher. Wherever you look, it's the same stuff. And he's here talking about the HEX and the home buyer guarantee scheme and how that's going to play out. So Louis Christopher from SQM suggests that we could be seeing prices between 8 and 15% higher in the major cities, particularly with those most popular with first-time buyers. So it's all about rates going up, rates coming down, prices going up. And by the way, CBJ came to the party and offered loan relief with a few caveats, with the concept of lower interest rates, despite the fact you need a 40% deposit. So, the story is prices, they go up.
Yeah, and again, I'm one to stand by our show and say that we warned our followers, we warned our viewers, and those further afield in the mainstream media, just because they don't report on what we say, because we're so far ahead of the pack. Unfortunately, many that don't follow our show are behind the eight ball. And they're missing out because it's not that we are proponents of home growth. It's not that we're proponents of higher prices. We're just looking at the data points, looking at what the major groups that influence the many markets across Sydney, what they're saying, what they're doing, not only what they're saying, but what they're doing, what their actions, so that our followers and our viewers can also have a sense of direction as to where things are going. When many are calling, when your Tom Panelses and your Mark Borises are calling, sell, 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 you and I were saying, and where do they go? Where do they go, nutcases? Because they've got nowhere to go. And this is, and those that, and then that some of them were even calling even higher rates. But when you assess the whole situation, it was always going to be, and you assess the trends and the demeanour of the political parties and which way they were going to go. You and I knew and know very well that immigration lever is not going to get pulled back. It is on full throttle. If anything, they'll hit the turbocharge to get to those targets that need to get. Secondly, my concern is that, as I say, metaphorically speaking, that they'll hit the turbo button or the supercharge button on immigration, because we need new lambs to the slaughter to buy the off the plan developments that have got to the ones that sort of feed the stamp duty revenues, feed the local government special levies and contributions in order to keep things moving afloat. So the locals are staying away from new developments. The locals are staying away from high-rise development. So you've got to bring new blood. You've got to bring fresh meat into the scene, and that is. That's what's going to happen. Apart from all the turmoil that's happening abroad, which is making our currency look like monopoly money, and making our lands pretty much a safe haven, again, because of the disruptions and the turbulence abroad. We are sitting, if you're a landholder, if you're a property holder, you are sitting pretty. But again, I say that our followers and our viewers knew and know and have navigate better through the through all the uncertainty and also through the shenanigans and and the misleading, deceptive conduct and bad advertising that selling agents put out there. So and I also say, Martin, it's not only just from a sales point of view, but you and I also talk and discuss on the show the effects to the rental sector, how we can assist those that are in rental need and accommodation, and the many tips and the many ways that we've shared over the years as to again put our followers and our viewers, many times first cab off the rank when it comes to for property managers to make those decisions.
Absolutely. And I want to make the point also, Edwin, and this little article highlights it. Not everything is happening in the same direction at the same time. This particular one is, again, talking property booms, but it's talking about the fact that suburbs in the north, in the west and northwest are predicted almost double. My point there is that you need to understand it's not uniform. Different parts of the market in different parts of the locations in different cities and different types of properties are not necessarily all going to behave the same way. So whilst there is this positive expectation in terms of future prices, not all prices are going to necessarily go the same direction and the same trajectory. And I continue to look at, and I had a one-on-one conversation this week with another property investor up in North Ryde, who's got 3 apartments that he bought some years ago now. And the latest on that is that prices are still falling in those high-rise apartments in North Ryde for 3 reasons. Firstly, because a lot more new stuff has been built in and around it, so supply is quite high. Secondly, the charges relating particularly to the maintenance of the building through the various charges that come through have gone through the roof, and they've got one-off problems now which are also needing to be fixed because the construction quality was pretty low. And the third thing is there's a cap on what people can actually pay by way of the rent they can afford. Because the other side of all of this, whilst we keep talking about prices going up, we have to remember that that means either mortgages are going to go up, which means that people are going to have to pay more, or if you're in the rental sector, then you're going to have to pay more too. And we are at the limits in many cases of what people can afford. So there is a very significant factor here. And by the way, there was this article, which I thought was quite interesting, that made the point that unit prices have tended to rise less, actually perhaps less than half the rate of houses in some areas. And they're citing the example there that the median unit price rose over the 10 years by 28.4%, whereas house prices rose 81.9%. And I think that's quite interesting, that there is a significant variation. Like I say, it's really important that people don't get caught with the expectation that everything everywhere is going to go high. It's just not like that. That isn't the way the markets actually are working. And so it's really important to really tease out what it actually means. And I just want to make the point, households are actually, so at least some, are caught. And I made a show the other day called Households Under the Pump as housing costs soar. And I explained some of the reasons why house prices were going up and the fact that people were actually in more and more difficulty. And by the way, on Tuesday, I'm going to run a live show and I'll be doing some further analysis down at the postcode level so people can suggest some particular postcodes if they want to and look at it. But the real issue is the data tells a very important point. And this show I made, Can't Spend, Won't Spend, says households. The data is showing that households are spending less per capita, not more. And part of the reason for that is that things are much more expensive. And one of the critical things is the cost of that mortgage or the cost of that rent is sucking out more and more of households' disposable income. So that's a very important thing to understand. And then the final point, and again, this is just another little plug for my shows earlier in the week. I made this show about the missing homes that won't get built. So the target of 1.2 million is getting further and further away. And, the fact is, if you look at Sydney, for example, in the outskirts of Sydney, they need about 24,000 homes per year new, and they're building about 5,000 new. So, just got to understand there's a lot more going on here than the mainstream is talking about. And the fact of the matter is that things are way, way more complicated, which means if you are thinking about property, either buying or selling, trading up or trading down, it's really important to get the right information to make good decisions.
Look, 100%, Martin. This is where you need experts on your side as well in order to make those decisions, whether it's to buy or to sell, or even to consultants like ourselves. And yeah, it's a free plug for for what we do, as we do help sellers prepare their homes to take to market as well, or properties in general to take to market, and we also go over similar scenarios like that you go over with with those that are inquiring more detail for those postcode for the postcode information in those journeys that you take them, in order to get the better the better agents on board, the better marketing campaigns on board, and so forth. So, but as you were saying earlier on, Martin, with regards to the 7 News article, with property boom, how the prices are just going to go skyrocket, and possibly double in some of the northwest regions and in the west regions. But you also got to understand and look at the price points that they're coming in as well. There are some older areas like your St Clair's, your St Mary's, but even they've been going hell for leather in terms of prices as well, because of the all the infrastructure that's been built in order to cater for the Badgerys Creek Airport, in the railway corridor, the bus line, and railway corridor to St Mary's. You look at those were once sleepy suburbs. Now they're all of a sudden being woken, and now they're looking at the main street of St Mary's. You've got all the high-rise development or proposals for high-rise development. Not that anybody really wants to build. So, and this is very, very important, is to also differentiate between, as you said, when the general public, when the mainstream media talk about homes, I like to sort of drill down into the article and find out, because they use homes, to suit they use the word homes, to basically, push their own little wheelbarrow. But it should be more specific and say the freestanding homes. We will see those average out above the 2 million, above the 2.4 million. We can see that rapidly because we're not really building. As you said, we're going down from 24,000 to 5,000, and they're your freestanding homes in your subdivision areas in many the outskirts of Sydney, northwest, south, in southwest and in the western regions. But you've also gone down from your 750 square meter blocks to virtually 254 square meter blocks of land on where you only just fit a modest 4-bedroom home on. And as I've said before, when you run out your back door, you stand to break your nose on the fence, and you just can't do anything there. So these are so when you again, we've discussed what's happening with the Blacktown regions and your Campbelltown LGAs as well, and the people that are driving those markets, which is also very, very important, which is the communities, and the people that you and I refer to as your silent tigers and your WeChat chatterers and your new kids on the block and everything. So you can see the general patterns that are being formed over the years, and more so what's going to happen moving forward now that the election is over. So look, but also, like, as you also alluded, and then you've got your apartments that sit, as the WeChat chatters said last week, do yourself a favour, stay away from Australian apartments, because that will be the end of you, and that, unfortunately, that is the cancer that is within the construction industry of most parts of Sydney. It's a blight on the construction industry. One of the things, with regard to, you mentioned a couple of reasons why the apartments weren't achieving higher values there. But one of the main things that we've witnessed over the last 6 months, more to the point, is with the with the tightening down of the screws from from Fair Trade New South Wales and also the New South Wales government across strata complexes and the strata reforms and also the residential tenancy regulations and act now that they're really clamping down on how property managers and strata managers should look after their roles more effectively. We find that it is harder and harder for your WeChat chatters and other groups to convert high-rise developments or units in high-rise developments into your budget accommodations because that area is tough. Hence the reason why we've seen that shift from your apartments over the years. And again, we called it first on Walk the World on Monday evening property rants. And we said that the focus was going to be on the homes. So look, I don't. I used to sort of put my thinking cap on. I used to sort of question the rises of property prices, freestanding homes in years gone by, pre lockdowns, pre-pandemic. But as I said, 2020 changed a lot in my mind and in the way things are operating, and we really see who's running the show, and we really see why they're wanting to run this race. And until you get all the powers to be, all the parties that should be involved, unless you start looking at everything holistically. There goes my favorite word and Kamala Harris's favorite word. Unless you start looking at things holistically, you're really not going to solve the issue, Martin, because you got your Cameron Kushners talking about one thing, you got your other commentators and reporters talking about one aspect of it, and you got others, but nobody's really talking about everything holistically, or they're too scared to speak about the elephant, the elephant in the room, which is you and I are openly candid about, and that is. Unless you start talking about, in terms of Maine, I mean, there's also sub-points, but unless you start talking about immigration, construction costs, taxes and levies on imposts on new developments and building and construction post the purchase of the land, unless you start talking about and also the red tape. And dealing with local the NIMBYs and the YUMBYs and the NIMBYs and everybody else in between, unless you start dealing all of it in as one melting pot, you're not going to solve the problem because the left's pulling one way, the right's pulling a different way, the middle are going this way and that way, and you got so. Unless there's a concerted effort, it's really hit and miss, and nothing gets done. I just love that phrase that you coined, the announceables. It's all just announceables, and come election time, everybody's hoodwinked by all the announceables, all the noise, and this is why I've said before, politicians it should be mandatory for politicians to carry a license, and they're like us real estate agents, we carry licenses as well, and therefore we can get hit with fines. So should politicians be hit with fines if the promises don't come to fruition, and you give them a time, when they make a promise, how and when. How and when should be the questions post the promise, and then you hold them to it and you hold them accountable. And if they don't perform, bingo, here's a fine and 3 strikes and you're out. That sort of stuff. But until we start taking things seriously, I know I say in a comical manner, in a comical fashion, but they're just taking us for a lend, Martin.
Well, that's right. So politicians can say anything, particularly through an election campaign, and make any promises they like. And then, of course, quite often things change and they don't necessarily follow up, or they make promises that they know that they will never be able to deliver. The 1.2 million homes is a great example, right? So everyone is saying, you'll never do it, you'll never do it. And the reason you'll never do it is because physically you don't have enough people to build and you can't get the resources to build. And of course, the costs are too high. So all of those things. But it is interesting, I don't know whether you saw this, that sometimes politicians have to change tack. And the UK have just announced this, that in fact they've promised to bring in tougher visa rules to try and fix, quote, the broken migration system. So they've this is Keir Starmer, has promised to overhaul a broken immigration system with plans to tighten English tests for all visa applicants and adult dependents. And migrants will have to wait 10 years to settle in the UK instead of automatically gaining status after 5 years. And they're talking about adult dependents will be required to show basic language skills. And in a statement, as head of a speech which is coming today, when people come to our language, they should also commit to integrate and to learn our languages. And people are saying, well, that might split families. It's interesting that we had about 700 and something thousand last year in the UK in terms of migration. So migration in the UK was lower than Australia over the same period. But it's fascinating that migration has now bubbled back up to being an issue that now the Prime Minister in the UK is wanting to talk about. Now, it's interesting that, of course, if you take the recent campaign in Australia, we had the Greens, who was way over we need more people. We had Labor saying, well, we'll do a little bit of twiddling around the edge, but really nothing at all. So migration will continue to bubble up, and we've talked about that and reasons why. And we had Dutton and his mob, superficially at least early on, suggesting migration might be dialed back slightly. But when you pressed against what they were saying, there was really no real move. So in the Australian context, the only lever in town is effectively high migration, because productivity continues to degrade, costs of fuel, energy still rising, and overall productivity will continue to go in the wrong direction. I know Chalmers has said, well, we're going to try and do something on productivity in this next term or two, but don't hold your breath. So the truth is, the only game in town is pump the property market higher, that quasi-wealth effect that you might generate from that, and pump more people into the country. So that's the future of Australia. And in that context, you've got to say prices will go up. Oh, and by the way, from a trade perspective, I don't know whether you saw this, but there was some discussions over the weekend between China and the US. I was listening to the Chinese press conference just a little while ago, and they were much more sanguine on the discussion. So they talked to them about being constructive, and they're going to talk again, et cetera, but no announcements yet as to what really was coming out of that. But I'm fascinated by in the US, they're talking this up as a major breakthrough in terms of trade negotiations. So I have a feeling, I don't know what you think, that the tariff wars and the currency wars are still going to be a very significant factor here. And it's going to, in fact, impact what China does vis-a-vis the US, but it also has an impact on Australia and indeed the property market in Australia too.
100%. And this is where the WeChat chatters and the silent tigers, when they speak and they talk, we know where things are going to be headed. Obviously, both are saying, collectively, they're saying that the more turbulence around the world, the more property markets will rise in the Sydney region, in many regions other than your Melbourne's for now. We can leave that to the side. But the interesting thing with regards to the wars, Martin, and the tariff war, is what the WeChat chatters are saying, based on like that post that you put up there. That Dusty's been going over and got some information over the weekend, and this is the new the new stage of where war is at, with the two major powers. They're saying that we've gone beyond the tariff war. We're now basically into the currency war, and as China is trying to establish a gold reserve in foreign countries, in order to give them that confidence, for the foreign country to have the confidence to trade in the yuan, because basically China still wants to challenge the strength of the US dollar, and the only way that they're going to be able to do that is to establish a gold reserve in foreign countries, so that they can then obviously use that their currency to trade. They just basically want to chop the US dollar at the knees. But what does it mean? What does it mean for us is more to the point and more to the discussion of tonight, and that is what they're saying, what the WeChat chatterers are saying. These are the local investors. Obviously, what they're saying here is obviously there are more turbulence. The potential drops in the US, in the value of the US dollar. More external currencies will be able to buy more. But the next point is the scary point. and that is overall, they're saying that many investors and institutions value stability more than higher growth. So they're looking more into Australia top tier residential assets. For them, it's stable growth and rental that is going to be more attractive. It's looking more attractive in the call it exclusive in your top tier residential markets, and you're going to get not only individuals but institutions is what they're saying that they will be buying will be buying into those top tier markets, which is rather frightening, which makes the local Aussie battler trying to get into the neighbourhood that they were born in and spent the last 30, 40 years of their lives and trying to stay in there close to mum and dad, grandpa and grandma to so that they can have the kids looked after and so forth. It's becoming harder and harder. And where they're going to be driven to? They're going to be driven into those high-rise dog boxes that are only going to be a thorn in the side for a very, very long time. So uh, it looks more and more. It's orchestrated, it's narrated, orchestrated, and it is a clear pathway for those that have to have more in the future. Because at the end of the day, as we said earlier on in the show, we're down to 1/5 of the construction of freestanding homes, which is the desirable properties that many are looking for. So, from the WeChat Chatter point of view, that is the turbulence, the new war, the tariff war, now the currency war, and the gold reserves, what China is doing, something that the mainstream haven't reported on as yet. But again, we hear it first on DFA Walk the World, Monday Evening Property Rant, and it's going to become more frontline news moving forward. But that all that turbulence and uncertainty is again, we go back to the article which they shared and you shared earlier on, and that is the property boom. And hence the reason why they can see and we can see from our standpoint the types of properties in the many areas where desirable properties are going to. There's only one way for them to go, and that is upwards. Albeit new developments won't necessarily have the same uh, a positive outcome, but that's for a different bunny. That's for a different lamb that's going to be slaughtered, which are your new migrants, your new your foreigners, your a call to your whoever that don't really understand that market, and they'll get burnt.
Well, that's right. And it is, I think, very important to underscore again this idea of the difficulty of building, particularly new housing developments. This chart, of course, is the NAB chart looking at the main barriers for starting new homes. And the red is March 25, the black is December 24, and the lighter color is March 24. So you can see here that there's been quite a change. So firstly, delays in getting permits are up at 62%. Labour availability has slightly improved, but it's still a 29% problem. The construction costs are still very high at 71%, but have come back very slightly. Housing affordability perhaps easing a little relative to where we were previously, particularly because of the expectation of future rates. Question of sustainability of house prices, still very, very low. The tight credit for developers, it's still there as a big one. But interestingly, rising interest rates from the point of view of the developers is not such a big issue as it was if you go back to March 24. So some significant changes there, which I think is quite interesting. And I do find these NAB surveys quite helpful when it comes to trying to understand what is actually been going on.
Yeah, and if you look at going back to the chart and the sentiment, the percentage sentiment of why they feel that things are going to, new developments or the main barriers, you look at the standouts, construction costs, delays in getting permits, and they're the main the standouts in terms of development, and they didn't add to that the taxes and levies that developers have to pay, which I would say, you talk to any developer, they'll tell you. And I've been saying this from back in 2008. When I first wrote that article on one of the investment property magazines, and opened that can of worms up, and to make people realise how much really is paid by developers, on new developments. That was a comparison of the building of a two bedroom apartments in Parramatta. And things have only gotten worse from there. But the other thing from that chart, Martin, is if you look at, not there's not much impact by way of them believing that the sustainability of house prices. See, they don't not believe that house prices are going to continue to rise. Yeah, I mean that's only a 6 or a 10% um, concern. And in terms, okay, where you've got the other one was tight credit for developers. Yeah, I mean, it's a 20%, 25%, but it's really, it's come back from your 25% in 2024 to 2025. Credit is available, but all the other factors that are creating more of issues, and they are more centered around the political side of the political side of things, and political decisions and bad policy, than anything else. Because the land, open up the land, and you allow the developers to build that on the blocks that are already gazetted, that are already being subdivided, ready to basically start the civil works, and the value of property in your northwest, west, southwest, and the south regions will drop dramatically, which will have a big impact. But they don't want that. This is the thing, Martin. This is the thing that they don't. That the powers that be don't want that, and it's a controlled exercise. And this is why, moving forward, people are going to start looking more and more, and they're going to start realizing that even the properties that are put on the market, which they've got to be very careful with, obviously, and make sure that they do the proper due diligence. The properties that are put on the market that require a lot of work, and require to be gutted, or for what I call full renovation. They're starting to become more and more desirable in comparison to knocking the whole bloody thing down and building something new. It's because the existing structure is becoming more and more valuable, regardless of how badly damaged it is or how badly affected it is, over the years, because it can still be used and you can still work with that, and there's less time spent getting permits, and because you've already got the structure, particularly if you're really only reconfiguring the inside. It's a lot easier to do than having to get approvals, council approvals and permits, and private certification in order to extend, go up, and go sideways and so forth. And it's that they're becoming more and more attractive, and there's a lot of competition, especially in those areas where you've got your groups, your groups, your very strong groups that are looking both from a principal place of residence as well as an investment point of view. So it's interesting times, but I think and now more, we're going to hear more about as you said earlier on, the interest rate drops, and it's going to change dynamics all around again. Throughout many markets have seen it, because look at what half a percentage drop did to many parts of Sydney. It just lit up a fire amongst those that were sitting on the sideline. And when you start talking two 25% drops, or 50% drop, or three drops before August or the end of the year, whatever happens, you see the emotional effect move in. But I can say again, there's the locals are being shortchanged, being thrown under the bus. First home buyers are being thrown under the bus. Locals are being shortchanged. But we're sitting very, very attractive to new PR holders, expats coming back, people that hold PR that have left Sydney, and don't forget people that have held PR before, that have got PR before, as long as they live in Sydney for 2 years over accumulating 2 years over a period of 5 years, they maintain the PR. So and you get more exemptions if you across those 5 years, you get more exemptions. In other words, you don't have to spend even 2 years living in Australia over the 5 year period if you're running a business, and you can make an argument as to why you have to spend more time over abroad than here. But these are the people that can buy, Martin. These are the people that can buy homes, and this is where I say the locals have been duped, have been sold down the whatever you want to use, sold down the garden path. They're being sold the lemons. We've been duped, and first home buyers have been thrown under the bus, and it's all because of the uh, you know, uh, policies that are but for one reason, and that is uh, to keep on bolstering the coffers of the governments, because public, what was it, the workforce, the Australian workforce is made up of 50% or so of public servants.
Absolutely. And it's just worth, I think, using the analogy. Remember the boiling frog analogy? So,
Yeah,
if you've got a pan of cold water and you put it on the fire, and then you've got a frog and you put the frog in the cold water, what happens is that the temperature rises and the frog doesn't notice until suddenly it's cooked. That's the analogy that I think we should think about with regards to locals trying to buy, because the gas has been turned up, property prices are continuing to rise, and people have become more and more acclimatized to paying ever more as a proportion of income, much more than previously. And that's true whether you're renting or whether you're buying, but particularly if you're purchasing. And now you've got to the point where people are desensitized to prices and mortgage commitments that a decade ago or 2 decades ago, people would never have ever thought about getting into. So we've had the situation now where the frog is very close to being cooked. And now the question is, Edwin, you mentioned interest rate cuts. Will interest rates be cut? And will they come down far enough and fast enough to be able to save some of those people that are very close to the edge? That, for me, is a very important question at the moment. And I'm open-minded as to what could happen. Sure, we might get 3 or 4 cuts through the course of this year, but the RBA was going to, I think, continue to be concerned a little bit about the impact on inflation of trade and some of the changes there. And so they might be a little bit more reticent to cut. They probably will cut, but I'm not sure it's necessarily going to be 4 or 5 as some. NAB is now saying, an end rate of below 3% by the end of the year. I would say that's particularly aggressive, but maybe they've got an interest in trying to talk the mortgage market up. So, Edwin, I guess the next thing to talk about is the latest on the numbers. And it is fascinating to see what's going on at the moment because, of course, we are in that sort of lull period. We've had the election. People are trying to work out what to do. The journalists and the spruikers are talking prices up. So the question is, are we going to see more people listing, or are they going to be holding? And interesting to notice that on the 5th of May, there were in Sydney 19,822 properties for sale in the Sydney region. It's gone up. On the 12th,
yeah,
20,335, which I find an interesting little trend tweak. Now, it might not be anything, but I think it might be significant. And this chart sort of shows it's a bit unusual to start seeing listings rise at this time of year.
yeah, it is. And I've had dug a little bit deeper to see if there was a surge in numbers from from landholders that are putting land envelopes or parcels of land on the market for sale, and that's really not moving the dial that much. A lot of it's really apartments that are coming on, and in some areas, just talking to some of the agents, it's going back to as what you say, you like to say, is there's a lot of lemons been put on the market because of and these are the old investors that want to get out. that are looking to get out. As from our previous charts, we saw what was happening over in your Katoomba areas where the numbers have actually on market have absolutely surged. Surged there. So yeah, it is bucking the trend from what I believe would happen. Um, is it the you know that when you hear read all the commentary, hear all the commentary, there's nothing, nobody's really that I've read or that I've heard saying positive about the economic outlook of moving forward with the Albanese government. Um, but you look you read and you hear the news and you read what the mainstream media are putting out there, and that is home prices are on the up and up. Is that what's motivating property hold to property sellers to come on? But we'll see. We'll see. Obviously, it's a 1.5 weeks of a jump. We'll see again what happens. Is it just a delay? But yeah, it's a moving target, and obviously this is an overall reading of the numbers chart, the numbers across the Sydney region, and obviously in individual markets within suburbs and LGAs are obviously trend somewhat different. But this is it is it is bucking the overall trend. Melbourne, however, is there's a lot more coming on. Then they just keep on keep on the numbers keep on growing in leaps and bounds. People just want out. People just want out, and a lot of them are homes, freestanding homes in the regional areas.
Yeah, so in Melbourne on the 5th, it was 27,854. And jumping forward to the 12th, 28,311. And as you say, a very significant push in terms of freestanding homes. And Brisbane, by the way, if you look at that, you can see there on the 5th, 3,630. 3,731 a week later. So there is something going on. And, this is not scientific, but I've had 3 conversations this week with people who have investment properties whose returns are actually pretty crappy, frankly, over the last little while. And they are getting to the point where they know they have to do something. And with this uptick in terms of expectations of future prices, they're trying to sell and get out while they can. So I think that's quite interesting. So in each case, and we sort of, had a little bit of a conversation about the particular area, and not all areas are behaving the same, but the factors that were driving their decisions were exactly as I said earlier on. Problem 1, the strata fees were going through the roof. Problem 2, the costs of the property in terms of the interest that they're having to pay on the mortgage are still very high relative to what they were. So they're actually in negative net terms in terms of cash flow. But problem 3, they're still sitting in a place where the price that they think they can get now is still lower than when they bought. Now, that's a really interesting observation, that people are still thinking of getting out despite the fact they're going to make a capital loss. So that'll be fascinating to see if it plays out. So I think this is a really interesting time. I'm seeing, as you say, a lot of lemons, a lot of properties that need a lot of work, a lot of properties that are actually, frankly, have been mismanaged to an extent coming on the market. So people need to be really cautious and careful if they're going to actually start kicking the tires on property purchases at the moment. And of course, it also means that vendors will probably have to pay more because, of course, or prospective vendors will have to pay more because the vendor who's trying to sell is going to say, well, price is going up. The media says price is going up, so they're not going to want to drop.
No, and the other problem that you have is that fourth point, Martin, and that's very important. And it, is not only with your strata lots, but also your freestanding homes, because in New South Wales across the board, where you're going to start looking in certain parts of the outer regional areas outside of Sydney that are going to increase in my opinion, the numbers will increase because you've got the regulations are now at play. The new controls for for basically evicting a tenant and then putting it back on the market
Yep.
with a with the excuse that I have to renovate or I have to do this or I have to do that. Now, all this is at play now, which means it's harder for people to have a 6 month fixed term lease on a property. Then they drop the tenant and then they go into a over the summer period, they put the property on a short term rental role or a short term rental um, offering because they make a lot more money. So this is going to be a very interesting watch and see how it plays out. I know that from your Wollongons down south to your Kiama, they're going to be affected a lot because of the way that properties are offered to market there by way of rental. Because in between a change of reason or tenancy, it demands properties could be sidelined for anywhere from 4 weeks right up to 12 months. So it's not let me just do whatever I want type of scenario. Those controls are at play now. Now, how much of that is going to affect the Sydney region that we often refer our numbers to is going to be a wait and see. But there could be some of the properties closer to your beaches, parts of your northern beaches in your eastern suburbs, and even your mountains area may be affected because of you can't. Yeah, it's either a fixed term lease, and if you drop the fixed term lease to go into a short term, or you're making an excuse that you're going to be moving in, or you're going to be doing a renovation or this or that, hey, that property gets sidelined. So people are making those decisions as well. So the regulatory changes to the legislation around tenancy and the controls of your strata complexes are putting that fourth a point of pressure on those that are holding investment properties that can't make it work now the way they used to.
Absolutely. And of course, the net investment yield is the real calculation that I always want to use with people, which is comparing the money that's actually coming in versus the money that's actually going out from a cash flow perspective, ignoring any capital appreciation or depreciation. And because of this issue of vacancy now perhaps required between tenancies to fix up things that need to be fixed up, it means that your cash flow looks even more sick. So it's a very important point. And again, people need to understand the changes in the regulations. They are different in different states. They're different in different areas, but they're having, I think, quite a profound context now on what's happening to property and, of course, the rental sector in particular. Let's just touch on the auction question because that's another interesting one. So here's the latest statistics on the auctions. And you can see here that, there's probably a little bit more of an expectation next week than this week. But Edwin, this chart is a killer, isn't it? This is fascinating what's going on here. How do you make sense of this?
Well, point number one, Martin, and that's first cab off the rank and top of the list is more and more people are listening to the show and they're listening to what we have to say about be wary of selling agents that come in Louis Vuitton, Armani suits, wanting to tell you what a wonderful job they're going to do by auctioning off your property, pricing it low to watch it go. These are tough times, Martin. These are tough times. And is it a question? Is it a question of people realizing that it demands a lot more time, a lot more effort, a lot more energy, and a lot more focus from the selling agents? Is that it? Is it a delay in the previous weeks where you had Easter, school holidays, the election, just compounded on people's lack of drive to look at property and people sort of perceived that and they started withdrawing properties from auction campaigns. But yeah, the numbers still the numbers that we look at, which is those on market according to the domain region that are listed on a Monday by 4 o'clock is what we go by, and the mainstream haven't picked up that we're potentially down to 57% or so of the amount year on year or week on week from 2024. So it is telling. I know one thing for sure, Martin, is that Tom Panels is certainly not a happy camper, because that means there less options to go around all the auctioneers. So what is it? My thoughts are on the fact that this is a more of a gauge on individual sentiment, market sentiment by way of the sellers, and as I said, somewhat jokingly before, but I think that people are becoming more and more educated with regards to the fact that tougher times and uncertain times, which we sort of are in uncertain times in a lot of the markets, demand greater attention by selling agents on the product that they're selling, rather than what they're wearing and what they're driving.
Yeah, and I've always said that I felt that the auction process was more designed for the agent rather than for the vendor, right? Not least because, of course, agents can charge more, they can get extra marketing costs, etc., out of the vendor as they try and sell. So there is a very important point here, and I've had more conversations in the last 3 or 4 months about people who are thinking about putting their property in the market, and I push them a little bit as to the questions that they need to ask their agent before you go down the auction route. And actually, those questions now are getting quite transparent, Tell me why the auction route is the right route to go down. Give me a justification, right? What are the benefits? What are the risks? And when you start asking that set of questions, it's amazing to me how often agents will pull back and essentially say, well, okay, well, we've got alternatives that we can explore, et cetera, et cetera. So to me, it is a sign of vendors becoming more educated.
Yeah, I think so too. I think so too, and there's less opportunity for selling agents to add those hidden costs. Look, Martin, let's not forget the fact that some auctioneers are now charging $1,200 to attend the sale of your most valuable asset on the day. And as I've said before, this is what they're contending with. Number one, the auctioneer that takes carriage of the sale of the property is only become acquainted with the property on the day, typically 5 or 10 minutes before the actual auction starts. They're reading the paraphernalia. This is most, not all, but most, right? So they don't even visit the property during the week prior, and yet they take carriage of your most valuable asset, and they're meant to perform to the best of their ability on that. That's bullshit. You can't, that's basically you're going to a surgeon to get your appendix removed, and he's a plastic surgeon, and all he's done is done breast implants, and all of us, he said, but hey, a scalpel's a scalpel, a stitch is a stitch. I just read up on appendicitis, before we sedate you, Mr. North, and hey, you know, you know, she'll be apples, and everything's cool. I mean, that's what more or less you're going to get. That's number one. Number two, the auctioneer, as we've shared before on the show, is basically navigating through the day that you end up with more traffic on the road between the hours of 10 o'clock and 1 o'clock 10 o'clock in the morning, 1 o'clock in the afternoon. And that's through other means and surveys that we've come to share with our followers over the many years. They are contending with navigating through traffic, and I see more and more that auctioneers end up more late to the auction than early. So they're frustrated. They are they're not thinking about achieving the best result. Again, as I said earlier, they're not thinking about. They're more thinking about which way they're going to go to the next auction. Which route are they going to take? Are they going to take the M2, the M7, the M5? How the hell are they going to traverse from from Parramatta to Campbelltown? How they're going to get? That's what they're thinking about, but they're not really focused on the on what's happening at hand. That's the noise that is happening. Thirdly, auctions are taking longer because people are becoming wiser and after a certain point in time, the novelty is wearing out, is wearing off, and people are becoming wiser. They've been listening again to our show, and as I've said to over the years, I've said I don't understand why the majority of bidders at an auction stay silent. You should be having a conversation with the auctioneer. You should be taking the auctioneer to task. You should be, because they've got carriage of the sale of the property. And if they can't give you answers for the questions that you have, the usual thing is, oh yeah, you would have known, it's on the contract. Should have talked to the selling agent. Hey, fine. But when I spoke to the selling agent, he didn't tell me, he or she didn't know. Now, please, you tell me. You tell me what is that? Is the dwelling that once upon a time looks, appeared to be a double garage that's now been converted into a granny flat, or sure, is that council approved? Now I know the answers. Most of my team will know the answers because we've already done the research. But the auctioneer wouldn't know. Wouldn't know what's one of my favourite sayings. Yeah, I wouldn't know whether it's a roof tile or a floor tile if you'd smacked them in the head. So this is the reality. So this is what you're. So that's your auction, and then on top of that, they're charging you $1,200 for the privilege of underselling your most valuable asset when it requires a lot more. And guess what, Martin? There are more, and there are more and more people standing by the sideline telling agents and agencies, and this is the conversation that I have with a lot of auctioneers that I know in the industry, and selling agents. They will ring up, and they're getting more and more, and it's more apparent over the last 3 months that many people are saying we will not be participating at the auction, so we can either negotiate prior, or if the property is available on the market, we will we will come and see you post. And this is where also you've got a lot of auctioneers that will continue to add pressure on the vendors, and I will then use the vendor's bid, stupidly throw in a low vendor's bid, thinking that they're going to extract create more momentum in order to get the sale on the day, to make the selling agent look good in front of all the neighbours that have turned up for the auction, rather than looking like the house was passed in. And this is why you've got like we shared last week, Martin, with regards to the eastern suburbs, where there are 13 or 14 properties that got taken to auction, and only two got sold. The rest got cancelled or passed in or postponed. That is your outcome, and that is a bad outcome. That is a bad result when you got all the street, all the neighbourhood coming to an auction, and the property gets passed in, and it gets passed in at a low value because the stupidity and the ignorance of the auctioneer and the selling agent, thinking that by throwing in a low vendor's bid that they were going to stimulate momentum, only to pass it in at a much lower price than the vendor's really willing to accept. So, and again, all it does is put a lot more pressure on the vendor, which is, hey, that is the strategy after all, right? It's not about getting the best result for your vendor. It's not about really getting the best result for your client. It's about selling the property on the day so that you can pay for the lease of the new Bugatti, or or the Tesla, and buy another Armani suit. I don't know.
Well, I
You
always
tell me.
say they just want a transaction at any price, right? That's all they want. Now, one other quick observation. I think this is another very interesting slide that you've provided, Edwin, and this is who's buying. So something is afoot here, isn't there?
It's interesting. We stopped sharing this slide because we had other stuff that we wanted to talk about in the previous shows, and I just brought this raise this, and also because of the low numbers, and we didn't get a couple of weeks of clearance rates from from domain, so to Easter and that, and going back, you look at you look at where we were on this on this chart. You look at where we were and how the top end. Remember how we basically clipped, eclipsed the 2 million barrier with the freestanding home median home sales, in March, and that's the effect. Well, what I call the US election or the Trump effect, and the momentum that the top end, because of the because of the confidence that was building up in the in the markets across the global markets, and also obviously also with to do with Australia, and I found that that number really skyrocketed. Then we dropped. There was a bit of a lull. Then we started. What I see, there was a hope of change for government, and we sort of started trending upward again across houses in Melbourne, across all sectors. But it was more evident in Sydney. And now that when things didn't go the way everybody expected, it looks like we're basically down to a median of 1,685,000, I think it is, from what they're mainly sharing, which is a huge drop from eclipsing the 2 million mark only 3 months ago. So again, that shows the sentiment, Mark. That shows the sentiment of the this chart is all based on the auction results, the median across, or the average sale on the weeks, that are charted here. So it's the average sale across the freestanding homes, apartments, both in Sydney and in Melbourne. So for clarity.
Yeah, and the fascinating thing about this particular chart shows you that, if you look at Melbourne, it's sort of bumping along. If you look at Sydney apartments, it's bumping along. But it's Sydney homes where the dynamics have been much stronger. And that's because we had quite a lot of interest in more expensive properties that came on the market earlier on. And I think some of that's gone away again. So some of the conversations I've had recently have suggested people who are sitting on more sporty properties with bigger price tickets are finding it quite a lot more difficult to find buyers who want to come and buy them at the moment. So it does tell me that there's something quite interesting going on. We'll see how it develops. Fascinating, really fascinating to watch, and we'll revisit that, I guess, in future shows. Just on the rentals, and we'll just look at the numbers there. So in Sydney, 11,045 on the market on the 5th, 11,099 a week later, so just a slight uptick. In Melbourne, on the 5th, 11,327 compared with 11,454 a week later, so just a small uptick. But I found this the most fascinating thing that you sent me this this week, right? The issue of Melbourne. Okay, yeah, UK plans to end free market experiences and immigration. We touched on that, but it looks as though they're all going to Melbourne.
Yes, they were send them to Melbourne. Look, Melbourne's had a blowout of the rail line that they've been building for God knows how long, and they're gonna apparently, or if I read right, they're gonna throw in another 1.3 or something billion at it. It's already above budget, but hey, they're also projecting to have 9 million people in Melbourne in 2050. So my guess is, Martin, that they need that in order for for people to pay the taxes so that they can pay the blowout of the rail system. That's just my guess.
Yes, and just to underscore the dramatic growth that would represent, would have a huge pressure on traffic, public transport, public services like hospitals, and getting around, and of course it would put pressure on the broader property market too. Although of course Melbourne, despite what people have been saying, Melbourne prices are still relatively wobbly, and I'm still seeing quite a few people who are deciding to sell and get out and take a lower number than they actually bought for because they're worried about how this trajectory is playing out. So for me, Melbourne is a little bit of a bellwether as to what could well happen. Massively high migration, putting a lot of pressure, and the once most livable city probably less so in the future, even if they do mess around with traffic lanes and try and do things to accommodate the ever greater numbers of people.
And it's the crime. The crime, man. The crime is one of the biggest issues, in my opinion. This is where a lot of investors are still. I mean, there's a lot of people that want to buy. That we know a lot of people that want to buy into Melbourne. And Dusty, you know, talks and chats over the WeChat chatter groups, but they're all sitting. They're all still sitting waiting because, as you said, they've also believe that Melbourne prices are going to go further before they bounce back up. But the other question that they're talking amongst themselves, and something that I raised, I mentioned to Dusty so she can see what the rest of the sentiment is amongst the local WeChat chatterers, and that is crime. Look, from when you put a concentrate that such high concentration of people in a city of that nature, and you just have to look at the different data points. And as I said there in my post, I said Melbourne has the potential to make what happened in Cabramatta in the 80s look like Sesame Street with regards to the crime. And that's the other pressure that's very seldom talked about because it's taboo to speak about, and that is the rising the crime factor in all these all around the central hubs in Melbourne. So if you get snippets from here and there over the mainstream media, but very little. And I think that is something. And my understanding is I follow an ex police officer on X. She's very vocal about this whole thing because of her involvement in the police force there in Melbourne. And from what I read from her posts, it's the Melbourne police force is absolutely decimated, and they can't. It's very hard to recruit. So here's a watch this space moment, as I said, and then it's going to be very very interesting to see uh, what what nationalities or the demographics that sort of starts gravitating towards outside of your investor groups.
Yeah, watch this space indeed. And as we come to the end of the show, you've got one more tip, and it's about playing ping pong. Well, actually, not playing ping pong, but being treated like ping pong.
Yeah, this is something that people have got to be careful. We're in turbulent times. As the listing numbers rise in many markets, and if you find yourself in a market where all of a sudden homes are not being sold or properties aren't being sold around you, and you need to sell, you need to put your property on the market. There are a couple of things that you need to consider when you're selecting the selling agent. The selling agent in the area with the most listings is not necessarily going to be the one that's going to take better carriage or navigate through the marketing campaign or give you the best marketing campaign, uh, in comparison to somebody else that's only carrying one or two listings in comparison to somebody that's carrying 10 or 15 listings in your area. They're not necessarily going to do the better job. It appears that they're the most active, but activity doesn't necessarily reflect the sale price at the end. It just means that they churn over churn and burn, as we call it in the industry. So in a lot of cases, if you've got an exceptional property, if you've got a property that demands a lot of attention, again, the marketing campaign is very, very important. And most of these churn and burn agents, they carry a lot of listings and appear to be very, very active. That's they work on that ethos. The shorter the campaign, the better. The quicker they make the money, and the quicker they move on to the next victim. So now you may have a property that that for whatever reason you value your property a lot more than your neighbor or those around you because of you know what you're holding on to. So in other words, there's not your motivation is to get the highest result. Obviously, the price point is higher than similar property or like property around the area. Your inclusions You can prove to the agency that your inclusions and the agent are a lot better quality, and you may have just freshly renovated, so you want to capitalize on that as well, and position and location makes a stronger factor. So now agents, be careful of the agent that sells you that buys your listing. In other words, panders to giving you higher than what you yourself even believe that you could achieve for the property, or for the purposes of using, as I say, using your property as a soundboard to sell other properties, or as a as a bouncing. They bounce from your property to other properties that the vendors are more motivated to sell because they got told even a bigger story, and they bought. The circumstances are a lot different to yours, so yours demand a lot more a lot more attention. But they will bounce other buyers from your property to sell them other cheaper properties, and it's a strategy that's commonly used in the industry. Um, I know, God forbid, that selling agents would do that, but Martin, that's the reality. Um, so, but they do, and this is where you've got to be careful who you choose. Very, 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 very important that you make the right decision, because just because they blow kisses in your ear as they're telling you what they're going to get for you doesn't necessarily mean that that's going to be a result. The result. So pay very close attention, not so much to the activity of the selling agent, but the end result. And look, you're in the neighborhood. There's nothing stopping you from going to your neighbor and knocking on the door and saying, "Hey, I'm looking at putting my property on the market for sale. Are you able to give me a guide as to what the end result was?" Because you didn't attend the auction, or because you got passed in or whatever. But and you find that in most cases, what they got told that they were going to get, and as to what they got, miles apart.
Yeah, it's unfortunately part of the landscape. So do your due diligence and make sure that you really understand what the agent is going to do and what they're not going to do, what they say versus what they do, and be very careful of this gap between the expectations that they set with you as the prospective vendor and the one they set to the market. And then they sort of try and wrangle the two together. Remember, I said they're happy to make a sale at any price. They don't really care. They just want a deal. They want the commission. So it's really important to do your own due diligence on that whole process. Edwin, thank you so much. Great conversation this evening. I think this next week or two is going to be fascinating. So I look forward to next week. There'll be plenty to talk about. We'll see you then.
See you there, Martin. Look after yourself and take care, and don't get mixed up with that white powder that's been doing the rounds over your way.
Yes, indeed. Take care. Bye-bye.
Take care.